Stocks under serious selling pressure here, but off the lows after what started as a scary open for investors. And joining us now is Mark Newton, Fundstrat Global Advisors, Managing Director and Global Head of Technical Strategy. Mark, you are the perfect pro to have on today, my friend. Let's start big picture. What do you make of this sell-off, Mark? What are the charts telling you?
Thanks, Josh. Well, look, a lot of this has been specifically technology related. And I think investors are trying to come to grips with this new era of really cross asset volatility that's affected not only large cap technology within equities, but also interest rates and FX. And we're seeing cryptocurrency declines. And so it's really a new era where a lot of these have been declining at once. I mean, the one thing I would say is that you really haven't seen that big of a degree in broader market weakness. It's largely been technology. However, that is, of course, something that affects most of our major indices and ETFs, and it makes the market seem like it's showing a big decline. But there are a lot of healthy parts in the market, and we can talk about that in a minute.
Well, Mark, that has been true largely in recent days, but today the selling has broadened out, right? We're seeing it a little more pervasive throughout the markets. Does that tell us anything? Are you sort of taking away anything about how long this could last?
My thinking is it likely bottoms this week. Tough to say that it has bottomed as of yet, but I specifically think that either this week or next week will bring a short-term low to this decline. And I say that specifically for a few reasons. One is that dollar yen, which is at least one of the reasons why equities turned down so sharply, was a huge change in policy. BOJ cut their bond purchases in half and obviously hiked rates. So we saw a big surge in the yen, and now we see this the entire trade is being unwound in the last few days. And so I think that's really interesting. And when you look at the carry trade, where people borrow cheaply in yen to potentially buy large cap technology issues, some of that has been alleviated. And now we're seeing the yen rise right to near prior peaks, or in this case, lows for dollar yen, which is 140.23. So that's going to be pretty significant support in the short run. And so I think that is really, really important. The second is that you're seeing sort of a dislocation finally in excessive volume to the downside. We never really saw that over the last few months. And so volume was a very orderly type decline. Now you're seeing a huge amount of advanced decline to the negative, meaning huge amounts of declining issues versus advancing volume into declining issues. That's giving you your first real whiff that we're getting close to a low at a time when the VIX got up near 60. And a lot of these fear gauges, when you look at just traditional sentiment polls, have turned very negative in a very short period of time. So when I look forward and I see, the Fed now has basically, we're seeing in the market pricing in a good likelihood of 125 basis points of cuts by December. That's interesting. For the first time, the chance of cutting in September has been raised from 26 basis points to over 50. So two 25 basis point cuts, a 50 basis point cut, which Powell was dismissive of as of last week, now is at least built into the market. So the market's gotten fairly valued, huge sell-off in technology. People have gotten scared. Obviously, it's a difficult time of the year in an election season between August and November. But I sense that, this is going to bring opportunity for those that like to buy dips, because I don't sense that this fear is really, makes a lot of sense based on looking at broad-based nature of what's happening across the globe.
Mark, you mentioned how there's some healthy parts of the market, which is welcome news on a day like this. Where are you seeing that, Mark?
Oh, just as early as really look at last Thursday, and we saw the XLV, the healthcare ETF, hit new all-time highs. And keep in mind, this is right in the midst of an ongoing sell-off in the market that started back on the 16th of July. And so this has been going on for over 3 weeks. And now you have healthcare hitting new highs. A week before that, you saw equal-weighted industrials and equal-weighted financial ETFs, RSPN and RSPF from Invesco, both hit new all-time highs. So we have a few different areas of the market that actually were acting quite well, but all of this continues to be disguised by, technology. This big tech wreck has served to really camouflage the market. And yes, it's very painful. I think investors have been overexposed, have huge concentration in technology. So a big sell-off like that in an area which is a major focus certainly hurts. But I would say that honestly, for those that diversify, there are plenty of parts of the market that are still working well. And now with a big breakdown in the dollar, that eventually is going to start to aid emerging markets when we can see a little bit of stabilization to this.
Mark, I want to ask you about one other area of the market that's not doing well, and that's crypto. You guys, your firm has been big bulls, notably on Bitcoin. And one of the theses with Bitcoin as it being quote unquote digital gold is that people should flow into it at a time like this. But I guess if you're borrowing in yen and buying Bitcoin in dollars, you know, that's not necessarily gonna help you out. So I don't know. I'm just curious what your thinking is right now.
Well, as a technical analyst, I would say that despite the fact that there's no perfect correlation between really Bitcoin and the NASDAQ anymore, I mean, Bitcoin largely has been going sideways since March at a time when the broader market really was going sideways for a number of months before breaking out. So Bitcoin largely has been range bound, you know, for the last few months. It obviously feels pretty severe when you see a big move from the highs like we saw, but compared to the move that we saw, you know, in the rally from last year, you know, it's really just a drop in the bucket. And if anything, you know, our head of digital assets, Sean Farrell, remains very constructive. And you know, my own thinking is that I don't see much more deterioration beyond really the mid to high 40s. And I think we will bottom and we can pull out of this. But it is going to be important for, look, the broader risk asset space to stabilize. It's very unusual and unlikely to see Bitcoin simply surge back to new highs if the rest of the world is falling apart. So we need to really see some effort in dollar yen holding, to see rates go down a little bit less severely, as you know, they've really been hastening in terms of how quickly we've seen the 2-year fall apart and the 10-year. And a lot of that started off based on disinflationary, you know, promises that was good news, and then recently that's turned into a little bit more of a growth scare. So that's, you know, I want to see rates stabilize a little bit. Want to see the dollar, you know, despite it being in a downtrend of late, and really see technology sort of hold where it is. The charts of RSPT, which you showed at the beginning of the interview, you know, that's getting down to very important levels. And so technology, you know, might take a while to get back to the highs, but it is certainly a very, very intriguing area to consider. You know, you look at NVIDIA's forward PE now of 26, very reasonable, you know, ahead of the Fed, of course, set to cut as many as 5 times over the next 4 months. You know, for me, that seems pretty attractive at current levels.
We'll see how things play out the rest of the week and the month and the year, Mark, and we'll catch up with you again, I'm sure. Good to see you. Thank you.
Likewise.